So commercial property rules are a little bit different to residential properties. Hey everyone, Tuan Duong, founder of Durotax Quantity Surveyors here for yet another video designed to help you become a better property investor. Tax depreciation isn't all about residential properties. Commercial tenants and property owners can also take advantage of tax depreciation. So today, we're going to show you exactly how we depreciate hospitality properties and fit outs, and how owners of places like cafes can also benefit from thousands of dollars in tax savings. Firstly, a big shout out here to the wonderful team at Sneaky's Kitchen in Homebush for their generosity to allow us to film here. If you're in the area, make sure you swing by and try out one of their fantastic burgers and pizzas. So commercial property rules are a little bit different to residential properties. Commercial properties that are built after the 20th of July 1982 qualify for depreciation claims, whereas residential properties only qualify if they're built after the 15th of September 1987. What's also great news for commercial property investors is that the legislative changes introduced on the 9th of May 2017 don't affect commercial properties. If you need to learn more about what these changes mean for residential properties, check out our video explaining the key dates you need to know here. Alright, so before we begin, what I'm going to share with you is applicable to cafes, restaurants, takeaway food services, pubs, taverns, bars, and even clubs. Ready guys? Come on into the back of the kitchen. So here we have a preparation bench. Preparation benches that are freestanding have an effective life of 20 years. Something typically this long, that's about 2 meters, would cost about $2,500 as an asset. Moving over to the kitchen appliance sides, we've got large commercial type cookers, which includes deep fryers, grills, and even a wok burner. These are valued between $5,000 to $8,000 and have an effective life of 10 years. Crockery, cutlery, and cookware typically are valued at $1,000 to $2,000 for a set, and these have a depreciable life of 2 years. We've got refrigeration assets, which have an effective life of 10 years and generally are valued between $1,000 to $2,000. Up here, we've got a range hood asset, which are commercial grade exhaust fans. They have an effective life of 5 years and typically valued at $3,000 to $5,000. So from the range hood, we move over to here, we've got the commercial grade dishwashing machine. Dishwashing machines are valued at $2,500 and they have an effective life of 8 years. From the commercial grade dishwashing machine, we move over to the coffee machine, which is located here. Coffee making machines, including espresso and drip filter type machines like the one provided here, is valued at typically $4,000 with an effective life of 5 years. Then from the coffee machine, we've got the cash register. They are valued at typically $200 to $500. These are freestanding and have depreciable life of 10 years. Moving into the dining area, we've got furniture that is generally freestanding in drinking areas of pubs, bars, and clubs. These pieces of furniture have an effective life of 5 years. And in dining areas, these have an effective life of 8 years. Generally, these are valued at around $5,000 to $10,000, depending on the level of equipment. Typically found in cafes is an audio and visual entertainment asset. These include amplifiers, speakers, television sets, or even video projection equipment. These can be valued anywhere between $4,000 to $6,000 with an effective life of 5 years. So there you guys have it. A walkthrough to give you an idea on what can be claimed and for who when it comes to hospitality properties. What's important to remember is that there are different things that can be claimed by commercial tenants and landlords. If you're a tenant, you can claim on depreciation for the fit outs for both plant and equipment, as well as the capital works. For landlords, there's much more to claim. You can claim on the shell of the building and any strata assets on top of any new fit outs you've invested, just like a tenant would. What's really handy to also know is that you're a new commercial property landlord and you purchased it with an existing fit out, and you or the tenant replaces with a new fit out. You as a landlord can also claim the scrap value as an immediate write-off for extra tax savings. If you've newly acquired a commercial business, like a cafe, restaurant, or bar, it's very likely that you can claim tax depreciation on your business regardless of whether you're a tenant or a landlord. Alternatively, if you know a friend, colleague, or family member who's recently started a new business and needs to hear this, please make sure you share this video with them. Make sure you check out our YouTube channel to subscribe for more videos. And make sure you click on the bell icon so that you get notified of the next video that comes out. I'm Tuan Duong from Durotax Quantity Surveyors. I'll see you next time.